Hey, good morning, everyone. Not seeing my video here. 1 second. Sorry, guys. Mark, are you there? Can you hear me? I got a problem with
I can hear you
my.
now.
You can hear me,
Yeah,
but my video is not coming through, right?
right.
All right.
Yeah, and
All right.
you
We'll
cut.
get.
Yeah, you're cutting out.
I don't know what's going on with my video. All right, we're gonna set up Mark in just 1 second. We got a couple guests today. Mark's going to talk real quick about TPCS, and we got Aaron hopefully joining us to talk about Quip. We usually start this show. There's again the VIP pre-market prep. We go over major earnings, go through the indices, talk about the macro economy a little bit. We're going to do that after we get the update on TPCS and Quip. So, Mark, I'm going to have you go first. Let me pull up the TPCS chart. They had earnings yesterday. So, tell us what we need to know.
Yeah, so no analyst expectations out there. They don't have any analyst coverage. So the way you want to look at this is in terms of revenue growth year over year. They have seasonality in their quarters, so you need to look at it quarter over quarter, year after over year. And this quarter represented the third straight quarter of accelerating and record growth. They hit the triple digit threshold, growing 106% year over year. It was 87% the quarter before that. So accelerate growth there. Their backlog is at a record level, in terms of end of quarter levels. And so what we have now is what you're looking at in terms of bottom line results is a mix between very strong profitability of the core Raynor division and the losses that are there and ongoing at the acquired company, Stadco, which is to be expected because that was purchased as a turnaround. Just as an example, TPCS's market cap is 50 million. They purchased Stadco for 10 million, even though Stadco has more capacity than TPCS. Our research shows that capacity is going to get soaked up and that the profitability is going to come at Stadco now that all these orders are flowing in through the backlog. So that's the operational side of things. So very bullish, exciting there. I was actually surprised by the level of profitability at Raynor. So that's a nice sign for what we might see at Stadco coming forward and for obviously the business in total. In other news, they filed with the SEC a proxy statement, and they're going to a vote to reverse split the stock so they can uplist to a higher exchange. That's big news. This is something that they haven't done in the 7 years I've been following the company. It's a sign coming from the conservative CEO Alex Chen that they are now they've reached escape velocity, as evidenced by the accelerating revenue growth, the 100% revenue growth, and that they're ready now to move on to a higher exchange for all.
Okay, two very quick questions for me. If you give me some rapid fire answers, were there anything in yesterday's ER you consider a upside or downside surprise, either qualitatively or quantitatively?
The only surprise to me was the level of profitability at Raynor. I think there was losses again at Stadco. Those are to be expected when you purchase an entity that can be worth $50 million for 10. There's some losses that you're going to take along the way. I count that as part of the purchase price, right? And that's been ongoing. So yeah, the only surprise was the sheer level of profitability. I wouldn't expect them to be able to drop $1 million of profit on 4 million of revenue at the Raynor division. So that's a very good sign going forward.
Okay, and last question, we're $1.50. I know you're a fundamental investor. You look at things through the perspective that a stock should be trading at a certain fair value today, and you try to capture that difference between today's price and what you think the fair value is. For in your mind, we're at 150. What do you think the fair value for TPCS is?
Yeah, very easy to look at that, right? So if you look at the 50 million of market cap, break it into 40 million for TPCS, 10 million for Stadco. TPCS just dropped $1 million to the bottom line on the Raynor division, not the Stadco division, the Raynor division, right? If you go $1 million annualized, that's 4 million. Slap whatever PE you want on that. If you say 15 on 4 million, that's 60 million of market cap for the Raynor division alone. And Stadco has just as much capacity, so you can add another 60 million for that. That's 120 million. That's more than a double from here for fair value, on top of the fact that the company is growing at 100% annually now.
Awesome. Perfect. Love the quick update. Money Mark, thank you for joining us.
Take care.
Take care.